protocol has just lost $285 million in a hack. I'm going to explain exactly what happened, the consequences, what caused the hack, the impact on the token, and really everything you need to know about the drift hack inside the Solana ecosystem. We're going to talk about that, and we're also going to talk about a lot of other news. Donald Trump failed to calm tensions with Iran. He did not reassure the markets at all. In fact, he made people even more nervous, and oil prices are now flying higher because of it. We're also going to talk about Bitcoin, Safe, Hyperliquid, Cubic, and a bunch of other topics. Hello, everyone, and welcome to Crypto Red, the crypto news channel. Let's start with the crypto market. Bitcoin is at $66,000, Ethereum at $2,000. Let's go straight into the big story because this is a major one. I wanted to talk about the hack that hit Drift. If you look at what happened, this concerned the Drift protocol. Drift is a perpetual exchange, a perp DEX. It's a bit like Hyperliquid, but on Solana. It's a well-known exchange, and it has just had $285 million stolen from it. I don't know if you realize how big that is, but that's roughly half of the protocol's TVL, more than half actually. This is a massive hack. It's a disaster for the protocol, really. So what happened on Drift? Well, an attacker managed to take control of the admin function of the decentralized exchange, and then once that control was obtained, the attacker transferred all the funds they were able to access. They basically took whatever they could take. According to Drift's own communication, this happened because of several things. One of the main explanations they gave was advanced social engineering. So in the end, we are talking about human failure, and that's really what it comes down to in most hacks lately. The attacker managed to convince administrators to sign a number of transactions, and with those transactions, they were then able to gain control over the protocol to add some fake collaterals. Drift also said this involved advanced feature, including what they refer to as durable nonces. Basically, that just means transaction could be signed and then executed later. So between the moment those transactions were signed and the moment they were actually executed, days may have passed. Yeah, so that's what happened. Then this is important. We are not talking about a smart contracts bug here. This was not a failure caused by poor smart contract security or lack of audits. This was about centralized mechanism that the protocol had chosen to keep in place. And those mechanisms became the weakness once control over the keys was lost. It actually reminds me a lot of the Resolve hack, because once again, the issue is not really in the source code, but the issue is in the administrative powers that were given to certain actors. And that is exactly why I personally like protocols that are truly decentralized. I do not like these kinds of backup admin keys sitting there in the background with the ability to access the funds. That is terrible design choice in my opinion. And this is catastrophic for Drift because, like I said, more than half of the TVL is gone. And more importantly, I'm pretty sure that the protocol simply does not have the means to reimburse users. Just look at how much money Drift actually generates. If you look at the revenue over 30 days and if you annualize it, you get around $7 million. I don't know if you realize how low that is. $7 million a year is nothing compared to the loss of more than $280 million. So to me, it's over. I do not believe users are going to be reimbursed. And honestly, something else surprised me. The Drift token only dropped around 30 to 40% over the last day. So I expected a much bigger collapse given what happens, and especially given what it means for the future of the token. In my view, there is no real future left for this token. I really don't understand why it is still trading at these levels. I don't see how they could get out of this. Maybe they issue some kind of debt token, and then hope that the token slowly regain value over time and share the profits with the debt token. But a bit like Bitfinex did a very long time ago. But no, I don't buy it. I do not believe in that scenario. I think people are simply going to leave Drift. Personally, I do not see how user can continue to trust this kind of protocol after something like this happen. In crypto, security comes first. Really, security comes first, and sometimes we see it come really last. Zach XBT also pointed out something else. Circle, the company behind USDC, did not react in time. According to him, Circle could have blocked a number of transfers, more than $100 million passed through Circle Bridge CCTP, and Circle did not step in. Circle gets criticized again and again by Zach XBT and by the wider crypto community for not reacting quickly enough during hacks. This is not the first time, and especially compared to Tether, the issuer of USDT, which usually moves very fast and frees funds much more aggressively. If you look at the breakdown of what was stolen, we are talking about $71 million in USDC, more than $150 million in JLP. You have also USDS, USDT, Jupiter token, Sol-related asset. Yeah, so a whole range of other tokens. This was really a huge hack. And the hack also highlighted another major issue with the multisig wallet that was managing this. There was no time lock. That means once operations were approved by the wallet, the multisig wallet, they went through immediately. Normally, you want some delay in place, some 24 hours delay, 48 hours delay, maybe even 7 days delay for certain sensitive actions. So the community has time to see major changes before they are executed. And not having that is a bad practice. There's another problem too, the multisig threshold itself. It only required 2 signatures out of 5 to approve actions. Usually you want a stronger threshold, 3 out of 5, 4 out of 5, sometimes even more. And ideally you want more signers overall, not only 5. You can have 10 signers, 15 signers in some really rare cases, but yeah, it's possible. People immediately compare Drift to other projects with the multisig. Jupiter, for example, has a 12-hour time lock. Camino also has a time lock. Drift had none. So yeah, that was a major issue also. Once again, this shows you the kind of risk that exists when you use crypto protocols. Security failures can happen. That's why you really need to analyze protocols properly before using them. You need to look at a lot of other things. Of course, you need to look at audits. But yeah, I know it's not everyone can read an audit report, but the first few paragraphs can be read by anyone. You also need to understand the major features of the protocol. So yeah, that's something that is important. And I know I talk a lot about decentralization, maybe sometimes too much, but decentralization is not just some philosophical ideal. It's also about removing centralized points that can be exploited by attackers or authorities. That's one of the reasons I like decentralization so much. Decentralization is a form of security. A truly decentralized protocol does not have admin entry points that can just be hijacked like this. And that's why I prefer certain protocols over others that are much more centralized. To be fair, analyzing all of this is not easy, I know. It takes real work. You need to look, like I said, at audit reports and sometimes other stuff in the documentation also. Anyway, I think we've covered the hack pretty well. Let's move on to the rest of the news. Oil just jumped 13% because of the war, everything that's happening in Iran. So what's happening here? Donald Trump gave a speech and a lot of people expected him to calm things down. Instead, he did not really say much that would calm the situation. He mostly repeated what he had already been saying for some time, that the war could end within 2 to 3 weeks. But at the same time, he also threatened Iran again, saying that basically he could send them back to the Stone Age. He made a number of very threatening comments, and in the end, oil rose after Trump's remark, even though the expectation had been the opposite. People expected a more reassuring tone, something that would calm the market, and that's not what happened. Oil is now at more than $100. It reached even more a few hours ago. We have not hit yet $120, but yes, we are at a level we have not seen in quite a while. It's honestly pretty grim. This has consequences for the global economy, and hopefully this ends soon and we get back to some kind of stability. Next, let's talk about MetaPlanet, the Japanese company that is basically becoming Japan's version of strategy, MicroStrategy. They keep buying BTC. Another $5,000 BTC has been bought, roughly $400 million. That is huge. Strategy paused last week. MetaPlanet kept going. They are now in 3rd place among public companies holding BTC. So they are behind Strategy. They are behind. They have passed Mara, and they just behind 21 Capital. So yeah, what this Japanese company has managed to do is pretty incredible. Next, you know what? Since we're just talking about hacks, let's talk about Safe. Safe, the company behind the well-known multisig wallets that are widely used on Ethereum and other blockchains. They just announced a new network. They call it SafeNet. So what exactly is this SafeNet network? It's basically a new way to protect transactions before they are sent on-chain, and not just at the wallet level. How wallets sometimes show warnings in Rabi, in MetaMask, and in other wallets, so you can get alerts, risk indicators, and different warning messages, not notifications. But most of the time, there is no actual hard block. There are some browser extensions that can block things in certain cases, but even those protections can often be bypassed pretty easily. What Safe wants to do with SafeNet is go further than that. The idea is to have a network of validators that checks transactions against specific rules to determine whether they look like a hack, a phishing attempt, or some other malicious action. And if the transaction passes those checks, then it goes through. What is interesting is that this protection happens at the network level, directly on chain. That means even if your computer is compromised and even if your wallet interface does not display the right information or does not show warnings at all, there would still be a protection layer at the blockchain level that an attacker controlling your computer or your phone could not easily bypass. And that layer could stop the transaction from going through. So I think that is generally interesting. It also gives more utility to the Safe token, and it is a good sign to see Safe going further on the security front and trying to build systems that can protect user against hacked front ends and compromised wallet interfaces. And of course, this is especially relevant because that is exactly the kind of thing that happened to Safe. Their own interface was compromised, which led to the Bybit hack, where $1.4 billion worth of ETH was stolen. So yes, I find what Safe is proposing interesting, and I'm glad they are continuing to build security-focused solutions. For now, it's barely in beta, just in test, but it has not really launched yet, but it will soon. So yeah, let's move on to something else. Hyperliquid just announced the launch of an Android app. Right now it's only a test, but it's still interesting to see Hyperliquid releasing its own Android application. I'm not sure where they want to go next. Maybe they want to launch their own wallet. Maybe they want to push harder toward the retail mainstream adoption. I don't know, but it's definitely something worth noting. And it was Hyperliquid founder Ilian Singh who posted the announcement. Now, I also saw something else. Be careful here because this came through a press release. So yeah, there is a bit of marketing in it, but I checked Cubic website and it's checked out with this news. So if you remember, I spoke to you a while ago about the fact that Cubic had effectively launched a 51% attack against Monero. The goal was to gain control over a large portion of its mining power, and they had the financial incentive model that was actually very clever. They encouraged miners to use Cubic's mining pool to mine Monero. Then they would sell the Monero, buy Cubic token, and distribute those to the miners. And that gave miners a better return than simply mining Monero directly. That model allowed them to gain a significant share of Monero mining. And now they're saying, no, actually, we're stopping mining Monero and we're going to try the same thing on Dogecoin. And according to them, it could work even better on Dogecoin. So that should be coming soon. Right now it's still in testing, but makes it interesting is that they, like I said, they tried it on Monero and it worked. And now they're going after the largest proof of work ecosystem. After Bitcoin, of course. You have Bitcoin, then you have Dogecoin. And according to them, it could even be even more efficient on Dogecoin because of the ASIC side would handle the Dogecoin mining, and the CPU and the GPU of the computers would be used to mine their own AI related projects. I have to be honest, I have not fully understood this AI angle with Cubic, but there's definitely some artificial intelligence narrative in there as well. And according to them, that whole structure would make the mining model even better. We'll see. I'm waiting to see how it plays out. The reason I'm bringing it up is because it could bring back hype around Cubic, which has dropped quite a lot lately, and it could also become a real concern around Dogecoin. If we start seeing the Cubic mining pool reaching 20, 30, 40, 50% market share, people are going to start getting seriously worried about the mining centralization on Dogecoin. And if that happens, it could affect the price in the near future if they manage to put it off. So yeah, that's it. That's what I wanted to say. I hope you enjoyed the content. Don't forget to like, comment, subscribe, and I'll see you tomorrow for the next one. Bye.